Hey guys, what's up? My name is Hassan and welcome to my journey in the stock market. Before we get started, I gotta give you guys a quick disclaimer. I'm not a financial advisor, nor do I know your financial situation. I'm not responsible for any of your gains or losses in the stock market. My suggestions are only suggestions. That does not mean you go out and buy these stocks. It is just a place for you to start your own due diligence. So with that, we can get started. I'm going to do a quick Broadcom stock analysis. Their ticker symbol is AVGO. So before I look into a company, one of the best place I can know or do a research about is I like to use Wikipedia because some people say it's not reliable, or I just go for some just basic information. Wikipedia is really simple, quick, easy to understand what the company is about. So Broadcom Incorporation is pretty much a designer or developer of global supplier of broad range of semiconductors and infrastructure solutions. Pretty much they provide products for data centers and networking. So in other words, it's a semiconductor company. It's very similar to Texas Instruments. So I'm just going to show you it's similar to Texas Instrument, which I have 4 shares of. My average price at $94.75. So let's get back to Broadcom. It's very similar to Texas Instrument, which I have 4 shares of. It's located in California as their headquarters. So I'm going to pretty much give you guys about 3 to 4 reasons why I'm looking to buy into Broadcom. So my very first reason, it's because of its PE ratio. So it has an extremely low PE ratio of 9.41 currently, and which I think is relatively low compared to its industry, such as if you look at TSM. So it's also a Taiwan semiconductor. So we said that our Broadcom has about 9.4 PE, and Texas Instrument, which is also a semiconductor, which has a PE of 16. And another company that's very similar, as I said, is Texas Instrument, and that has a PE of about 18. If you look at it, it's about 18.36. So compared to those two companies, Broadcom has a way better price to earning ratio. So then I'm going to go into my second reason, is because of its dividends that it pays. So if we look at their dividend, Broadcom has relatively high yielding dividend of almost 3.96%, which is almost 4%, which I think is amazing because we don't know if we're going to get a recession, or if the market's going to slow down, and if it does, or if Broadcom has a major pullback, in the meantime I can collect my 4% dividend as I wait it out. So another thing I want to showcase is that their dividend yield. Whenever I look at a dividend company, I always check out what is their payout ratio. Okay, so if you go straight down, I'm on Yahoo Finance. I find it a lot more reliable than Robinhood app because Robinhood doesn't update it as much frequently. So pretty much it has a payout ratio of 24%. That means that they have a lot more room to grow. So I'm also also, when I'm also looking at or doing an analysis of a company, I also look at their dividend history. So one of the best places I'd like to look at is their Broadcom's is NASDAQ, or yep. So their dividend history, instead of click on this. So if we scroll down, if we look at where Broadcom has been paying dividends since 2010, and we can see as every 3 months they pay their dividends. So 12, 3, 6, 9, 12. So pretty much every 3 months. So we see in 2010 it's 7%. As we go from 2012, 13%, and then we reach 25%, 25 cents, and then all the way to even 2015. So they're constantly increasing the dividend quarter after quarter or year after year, which is a very good sign. And they also have a really pay. And currently they made a huge jump. So we see $1.75 in 2018, and the next one, December, they just increased it to $2.65 per share. So which is great. So, and right now currently it has a 25% payout ratio, and there's a lot more room to grow. So my first reason, low PE. Second reason, paying an awesome dividend of 4%. And my third reason is I'm going to look at their profit margins. And so before we do that, I just want to look at their revenues. So if you look at their revenues from 2015, is around 7 billion, 2016 about 13 billion, 2017 almost 17 billion, and then 2018 they got 21 billion. So in the last 4 consecutive years, they're constantly increasing their revenue, which is a very strong sign. What's even more better about this company is that look at their earnings. Earning is $12 billion for 2018, which is amazing. And this has to do, part of it has to do with their profit margin. So currently, if we scroll down around their profit margin, the profit margin is insanely good at 58%. So profit margin pretty much tells us how much profit they're making when selling a product. So pretty much, in other words, their profitability. So they're pretty much making 58% on their products. So yeah. So for every whatever the profit margin is pretty much how much profit they're making on selling the product, and they're making 58%. And for those 3 reasons, just to sum it up quickly because I don't want to make the videos too long, for those 3 reasons, they have insanely low PE of 9.4. They have a PE of 9.4, or high dividend and insanely profit margin. And I forgot to tell you guys the price. It's $267 per share, even though personally I don't look at the price because it matters. I look at the company more than whatever the current price is. If I look at the company first, then I can tell, then I look at the price to see if it's high valued or lower price, or lower, is it a good value or not. Because if I look at the price first, it throws me off. That's why I look at the company first, company's number, and then from that I like to determine what's their price should be around. As always, just sum it up. As always, thank you. See you next time.